Shah now joining in to decode his outlook. Gautam, good morning. We have seen those bouts of volatility and, as you said, attempts by the bears to get in. Do you think they'd likely be successful, or that this one-way rally is only likely to remain unabated?
Good morning. Well, I think it's been a fabulous run at the markets. If you really ignore the news flow around us, whether it's relating to the economy, COVID, geopolitical factors, or the global volatility, or with what's happened to precious metals, this has really been a textbook style uptrend. Shallow corrections, continuously making higher tops and higher bottoms, leadership from a number of sectors, India VIX correcting, and all of these factors just tell you that the market setup is really quite strong. And the fact that you keep seeing these corrections from time to time has just not allowed the market to turn overbought. So while you might be at 11,200 index, if you actually look at the technical studies, they're not really overbought because the market has adjusted itself beautifully. Also, I think what is very interesting to note is that this recovery has broken all stereotypes of the last 5 years. Every time the indices did well, we always looked to banking, we looked to some of the consumption names, we looked at the top FMCG stocks. They've all taken the back seat. So clearly, this is a very unique, very rare kind of a bull move that we are seeing, led by pharma, led by IT, led by metals. And I think this is going to continue. So for the next few weeks, I think Nifty is going to be irrelevant because it could face resistance around 11,350 and it could extend up to 11,600, which has been our working view. But I think the action outside the index is where the real opportunities are. And on the downside, till the index is above 10,850, I think all is well. And that's the level where, one can continue to trade holding a trailing stop loss.
Yes, the real action clearly has been in pockets of, chemicals, pharma, and even metals, as you've alluded to. I'm going to come to those in a bit. But what's the view on some of those large cap names within the banking space?
Well, banks have been a big laggard. I think this is a surprise for a lot of people because many money managers, many HNI portfolios, are aligned towards the banks. In the last 6 years, every time the Nifty has done well, it's always led by the banks. And therefore, clearly, there is a sort of a discomfort in the market because the top three names, an ICICI, an SBI, a Kotak, none of them have really done anything special. In fact, most world markets, including the indices, have retraced almost 70% of their March lows, and the bank Nifty is not even able to do 35 to 40%. I think this trend is going to continue for the rest of this year. And the point which I've been making to our subscribers is that this is a banking-free bull market. So the opportunity is going to remain elsewhere. And the bank Nifty will not fall. It's just that it's going to remain in a range. It's going to buy time and it's not going to do anything special. So you need to be underweight on the banks going into the next a few months and overweight into some of the other sectors which witnessed substantial damage in the last 2 years.
Okay, fair enough. Let's talk about some of the other pockets of the market. The current environment, of course, has been all about pharma. Do you continue to see action there, Gautam? Do you see it peaking out at all? It doesn't seem like it, but do you also see interest widening to across the board on those pharma names?
Oh, yes, pharma has really led this entire bull run from the March lows. I think every time we've spoken on your channel, we've spoken about pharma being our top pick, and that's been validated with the kind of move that we've seen in the last 2 weeks. This is going to get better. It is going to spread out. You are seeing a lot of the underperformers of the recent past now making a comeback, like a Sun Pharma, which was languishing in a band for almost 3 months. And on the index itself, I think our working target has been about 12,000. So that's a good 6% away from where we are right now. But the eventual target could be as high as 13,200. This is a theme which will not, get away easily. I know a lot of people are saying that it's gone up so much. So is there a room to correct? But the point is, all those money which was stuck in some of the other sectors is now coming into pharma, chasing outperformance, chasing alpha, and that's probably the reason it will do well. And let's not forget, pharma is coming out of a 2.5-year bear market, so clearly the scope for recovery is large. But I think MNC pharma is something that we do not like. I think it has been the poster boy space for the last 5-6 years. Many have been wealth compounders, but now the focus is really shifting into the local companies, and the local companies should offer greater upside going forward.
All right, fair enough. What about cyclicals? We were speaking to Kenneth Andrade this morning, and he was saying that, it's still perhaps going to take a while, but we haven't yet seen that move, particularly, let's say, also on utilities, for example. Do you see opportunity there?
I think so. I think the price action is far ahead of the fundamentals and far ahead of the news flow. I think that's exactly what you've seen in the last 3 months, because if you just went by the news flow, India should not be trading at 11,200, and there is so much talk about the Indian market PE trading at historical levels, but the market has really shrugged all of that, and given the way some of the metal stocks have bounced back in the last 1 month, it gives me a lot of confidence. I think metals also as a space is coming back after a big, massive 2.5-year bear market, and therefore the scope for recovery is very large. So the top 4 or 5 stocks in the metal space has been our favorite bet, which we have been recommending to our subscribers. And I believe that the metals index could be heading towards the level of 2,700. So that's another 20% from here. So cyclicals, I think as a basket looks good. Yes, they are coming back, and they are taking over from some of the other sectors like banking, which are clearly not doing so well.
Yeah. In particular, Gautam, wanted to talk about ICICI Bank because, irrespective of the consensus on the street and just about every analyst having a buy rating in ICICI Bank, the stock has been unable to really push forward. In fact, after getting to those 370, 380 levels, it's fallen pat at 340, 350 thereabouts. It's a struggle really for this one to push higher.
Yes, there is indeed a problem. If you look at the last 6 years, when banking did well, you don't have to tell it 10 times that please move. It just moved. Anytime there was some news, it just moved. But in the recent past, every time there has been an attempt to rally, it has just fallen short. It just seems as if there is selling pressure on every rise. In the last 6 years, there was always demand at the lows, but now there is selling pressure at the highs. So I think one should not waste time looking at the banking space. I know it's a very large part of the overall market, but because it underperforms and because the leadership has changed, I think we should stay committed into pharma, IT. I think IT leading the market into new lifetime highs, I think is a phenomenal development, which is here to stay. And I think mid-cap IT has been our dark horse pick for a while now. So I think, pharma and top FMCG stocks are an avoid, and everything else in the market looks much better.
Fair point. What about Reliance? Given the leadership and the strength that Reliance has provided, and the start of this week, that 7% move that came in on Reliance, which single-handedly did the trick yet again for the Nifty, taking us back into the 11,100 plus kind of groove. For fresh entrants, do you think there is still enough opportunity to get in even at the 2,100, 2,200 odd level for Reliance?
It's not so comforting to be entering Reliance at 2,200, to be honest. I think the move has been phenomenal. It's doubled in a matter of 3.5 months. But every time there is this small 4, 5, 7% kind of a correction, and with the base around 1,900, 1,950, one could look at an opportunity. But the kind of opportunity which is available elsewhere is something that we don't get in Reliance at these levels. Yes, I remain bullish. I don't think there are signs of topping out. This is a stock that can easily move towards levels of 2,500 if you're really looking at it from a medium-term perspective. And Reliance is doing now what an HDFC Bank and Bajaj Finance did in the last couple of years. So it's going to be a very narrow, uptrend that you're going to see led by IT and Reliance. So this will continue, but as I said, my favorites are in some of the other pockets of the market. But speaking of oil and gas, I think the OMCs, HPCL and BPCL have a very interesting setup. I think a foundation is being laid for a much larger move. So if you want exposure in this space, those two might be better picks.
Okay. Besides the OMCs, could you highlight some of the other names that you're bullish on right now? Because you said that there are many opportunities in the market, and now with the broader market as well performing, where do you see opportunities to buy into right now?
Well, our topics remain in the form of IT, oil and gas, metals and pharma, so that does not change. But the real opportunity is in the mid caps and the small caps. You know, the mid cap index as we speak is hitting levels of 16,000. There is for another 500 points. But if you look at it from a medium term perspective, I'm looking at a level of about 18,000. So that's another 15-16% upside gradually over the next 6 months. And I think within the mid-cap space, you know, there are a lot of pockets that are starting to do well. Auto ancillary, some of the power stocks, some of the fertilizer stocks, some of the agri-based, stocks are starting to do well. Some consumption stocks have also started to make a comeback. So these are pockets without really taking names, you know, which I like. And on a day-to-day basis, there are many stocks which are breaking out of foundations. And not to forget chemicals. I think chemicals has been the big theme of the last 6 months, but it just keeps getting stronger every passing week. And the results, you know, have only validated that. So these 4 or 5 themes that I mentioned, I think are the ones where we are focusing on.
Okay, Gautam, great to have you on the show. Thank you so much for taking the time out and highlighting some of those buzzing chart names. For the markets, we continue quiet, 11,187. Not much of a move in the Nifty. The broader markets holding up. Torrent Power, SRF, Tata Consumer, Polo Tires, RBL Bank being the big winners today. Lupin Idea continue to reel under pressure, and some ease off for NIT as well as HCL Technologies too continues. We're going to take a very quick break. Lots more lined up on the other side.